Very warm welcome. You're watching Your Trades on ET Now. This is Priyanka Uppal, along with me, Shriyansi. Shriyansi, looks like there's no stopping for Indian indices. Every day we see a new high, and now again we are near the record levels. Bout of volatility, what we saw throughout the day, but then we close at the highest point of the day. Baby steps index took, but then yes, we've inched higher. Nifty closed at the highest point of the day. Mid-cap recovered nearly 250 points from its day low. Though there was thin liquidity, uncertainty about the Fed rate cut move, but then Indian indices are on a different tangent. Top sectoral moves came in from consumption, auto, energy. In fact, auto pack was in the top gear, I believe. Auto particular stocks like Hero, Bajaj, M&M, they were leading from the front, and a couple of names from the pharma space as well. Cipla, Divi's Lab, some consumption name as well, and along with it NTPC, which is also continuing its momentum. Yes, of course, this was on the market side, but then a couple of broking notes which created a good movement in the entire city gas distribution space was UBS note. UBS came up with a buy note for IGL. It maintained a buy note for MGL also. Hiked the tiger price for both, majorly on the back of the strong improved volume growth. So a lot of action in sense of it was typically a stock picking market. It was a stock picking market, Shriyansi, wherein we saw selective pockets, selected stocks, but then yes, move was very strong.
Well, absolutely, that just about sums it up, because the move was really very strong indeed. And when you take a look at the ones that were in top tier, the ones that make it to that list, you do have Ola Electric making it to the list of counters that were in top tier today on the back of brokerage notes. So you've got a couple of brokerage notes actually coming out for Ola Electric. So you did have BofA that initiated a buy with a target price of 145 rupees. Goldman Sachs as well initiating a buy with a target price of 160 rupees. And they're both talking about EBITDA break-even, they're both talking about technology and cost leadership, and that was the kind of commentary that we saw come in for Ola Electric as well. Now, UBS was up to a lot in today's trading session because a consolidation may be brewing in India's wealth management industry. In fact, sources inform ET Now that Swiss banking giant UBS is exploring options for a strategic partnership for its wealth management business as well in the country, and it is in talks with 360 ONE. We'll get you more details on this throughout the course of the show as well, but that was one important update that we had today. And of course, it was the power counters that were in focus, and they've been in focus the last few days as well. When you take a look at IREDA, that is the one that was in focus today on account of that commentary coming in from the management. The management expects government not with 10% stake dilution in 2 to 3 days. So that is going to be a major trigger coming in for IREDA there, Priyanka.
All right, so a lot of, major trigger coming in for IREDA. These were the stocks which were buzzing in trade today, but let's understand from Shilpa Raut, who's joining us to give us a technical perspective on their index. What has she, noticed for us? Shilpa, welcome to Your Trades. Tell us, FIs also have been playing a hide and seek kind of game. Now again, they were sellers. Before that, they were buyers. But of course, Indian markets are a different tangent. Looks like right now we are completely decoupled from the global cues. What indices has to say about, at least in terms of the move they have been. They've been perching higher, baby steps it took, bouts of volatility, thin liquidity, but then at least we've seen higher levels from here. What would you do from here? Would you hold on to your long position? Trail your stop loss, or is it a time to be a little cautious?
No, definitely, Priyanka, we would be trailing the stop loss. Nifty has completely, the index has been holding on to the gains that we have seen the past, 8 to 10 sessions from now. And the closing above 25,400 is a very positive trigger. And from here, if we continue to do so, a couple of sessions of, a pause here, and we might see again Nifty heading towards new highs of 25,800 to 26,000 zones. So very bullish on Nifty. Trailing your stop loss to 25,200 right now is also quite wise. And for little more positional players, 25,000 as long as Nifty is holding, we believe that, the upside is still intact for targets of 26,000. Talking about Bank Nifty has given a very strong and a decisive breakout today. Holding and, sustaining above 52,000, it is very positive. You will see the levels of 53,500 to 54,000 coming in very soon.
Thanks, Shilpa, for that update coming in and that take coming in. But which are the picks that you have for us today?
Stocks to look for tomorrow would be one, where volume has been very high and stock has, taken support from the downside. The first one would be SRF. SRF has taken a good support at 2400 zones. I believe, a stop loss of 2380 should do the trick, and you should look for targets of 2500 to 2530 zones. The other one would be RT Industry. The last hour we saw very strong volume participation, and as long as the stock is holding 550, I believe it is there all set to test 580 to 600 zones.
Aarti Industries looks like the gains have reversed, the losses have reversed now, and the technical pattern suggests her to buy. That's what she's recommending, buy on Aarti Industries with a target of 600. Thanks very much, Shilpa, for the view as well as the two recommendations for our viewers. Moving on, Srishti joins in to tell us the two stocks that she's highlighted on the charts. Srishti, the combination or what is it?
Well, indeed, today a combination because the markets are getting ready for the big event as well as giving the moves on both the sides. First up, let's have a look at one of the breakout candidates, and this one indeed is the top gainer for Nifty 50 today. Hero MotoCorp on the charts, that hit its all-time high levels in today's trading session, zooming away in trade. Almost a 3% gain is what the stock registered in today's trading session. And what was interesting to see on the charts is the breakout of its previous high as well, because earlier as well you will see that 5800 is the level that the stock actually retested a while back. Its stock managed to break out above those levels, did retrace a bit, taking a support near to its 20-day moving average, and yet again continuing its uptrend. So this is the first stock that we wish to highlight on the breakout side. All-time high levels coming in for Hero MotoCorp. But on the flip side, that's Aarti Industries that we wish to highlight as the breakdown candidate, because for today the stock has fallen more than 2%, and the stock was seen to be retesting one of its crucial support levels of 560 rupees, because as you can see that it is the double top rejection pattern is what the stock has registered, coming all the way down to 560. Obviously it was supported by a lot of fundamental news, earnings as well as earnings downgrade as well by the brokerages, but the stock hasn't been supportive and reacting to all the news flow out there. Other than that, the stock is now trading above its key moving averages. All in all, the kind of a fall that we have seen in today's trading session, it was a bearish engulfing pattern as well. So Aarti Industry was seen to be getting back to one of its key support levels, and that is why we spotted the stock on the breakdown side. Back to you guys.
All right, thanks, Srishti. So that was Hero Moto on the breakout side and Aarti Industries on the breakdown side. But let's get you the word from the wise now. Vineet Sambre, Head Equities, DSP Mutual Fund advises investors to remain cautious on small and mid-cap space for the time being, and also believes that investments should look at the space for no less than 3 to 5 years. Listen to what else he had to say then.
I think interestingly, we are still seeing money flowing into the small caps and mid caps as a category. While this skew has moved towards the thematic funds significantly over the last maybe 2 or 3 months, but the flows in the mid and small cap still continues. And I think the important trend to sort of maybe be aware about is that when we are talking about growth in India, while we can have these labeling around the large cap, mid cap, small cap, but the growth also is broad based, and we see that a lot of the segments which are principally within the small and mid cap space are also seeing benefit of growth coming through. So I think that is maybe keeping the interest level high as far as these categories are concerned. But if you ask me personally, my opinion at these kind of valuations, it is okay to have exposure to mid and small cap, but just that given the valuations, the time horizon investors should now sort of think about, especially in the small and mid caps, has to be clearly 3, 4, 5 years, not anything less than that. I would say one should remain cautious because these are very exciting times, but markets could remain volatile.
Okay, markets could turn volatile, and that's the time when you have to be cautious. This is what Vineet Sambre has to say on this. We'll stay for a short break here. More to come on the other side of the break. Don't go anywhere. Welcome back. You're watching Your Trades, and now time for the UBS report on City Gas Distribution, which took the stocks higher. As CGD, City Gas Distribution companies, the likes of IGL, MGL, Gujarat Gas, they were in focus the whole day on the back of a brokerage note Varun joins in with more details. What was exactly mentioned in the UBS note? Varun, over to you.
So UBS has actually raised the target on IGL and MGL, and actually they have upgraded IGL from a sell to a buy and raised the target from 400 to 700. For MGL they have a buy rating and the price target has been increased from 1600 to 2400. So this implies around 30 to 32% upside on both the stocks. There are two things that UBS is betting on. One is the volume growth and the next one is the M&A opportunities. Let me first talk about the volume growth. Now UBS says that the infrastructure for the city gas distribution companies is expanding and these companies are entering into new geographies. That will aid the volume growth of these companies, and they are expecting from FY24 to 27, IGL volume growth will grow at 8.2% CAGR, and for MGL the volume growth will grow at 10.2% CAGR from FY24 to FY27. Now coming to the M&A opportunities. So UBS says that the fundamentals of this sector are good, there is no doubt about it, but the inorganic growth prospects for this industry is very large. And currently if you look, market is not factoring in the potential M&A opportunities available in the industry. And these are the two reasons for which they have raised the target on IGL and MGL and actually upgraded IGL from a sell call to a buy call.
Alright, thanks Varun for that update coming in. So looks like UBS is quite bullish on those city gas distribution counters, but it was one space that was really cementing decent gains, and that is realty. Now let's put the spotlight on the real estate space then. We caught up with analysts from Magic Bricks, Knight Frank and JM Financial to understand what's next for the space as well, and will the uptrend really sustain? Listen into what they had to say then.
I think real estate as an industry continues to be on a strong wicket. We are seeing the bull run as continuing. I think the market will tend to do better, at least in the short term. But at some point of time, I think affordability will take a pinch. You're looking at the industry giving you between a 10 to 11% kind of return over a long period of time. And that's quite favorable.
The vantage point we are looking at both sectors doing well at least for next 2 years. The affordable housing was not doing good for last 3 to 4 years. This year, with the Pradhan Mantri Awas Yojana 2.0, we are expecting even that sector getting a boost. Even going forward, we still don't see any dark clouds, even for office sector.
Going forward, we expect roughly around a 12 to 14% volume growth for this year, and pricing growth somewhere in the 6 to 7% range, which means the overall industry will probably be growing at a 20% top line for FY25.
All right, moving on. Now, a couple of stock and brokerage notes on the newly listed counters like Ola Electric, Bajaj Housing Finance. Interesting notes coming in, and that the stocks higher, and a host of other couple of stocks which Gaurav has a list who joins in to make us understand that what was the news flow behind these stocks. Gaurav, over to you.
Well, yes. First, let's begin with Bajaj Autos, because this company has launched 2 new vehicles. Now, these motorbikes are in 400cc segment, and these are in collaboration with Triumph. And as a result, we saw some uptick in this stock price. Next, let's talk about SpiceJet, because company recently launched its QIP, and as per sources, the company is intending to raise almost 3,000 crore rupees. The indicative issue price is at a 5% discount to the floor price that the company has discovered. And sources also says that they have actually received very good response, and it exceeds around 3,000 crore rupees of mark. But when we talk about the stock price, we saw some pressure building up in SpiceJet. Next, let's talk about Gujarat Gas, because as per channel checks, IOCL has now introduced import duty exempted propane and LPG in Morbi region, and as a result, we may see some direct benefit coming up to propane in Morbi region, and as a result, we saw some pressure in Gujarat Gas as well. Next up, let's talk about Bajaj Housing Finance. Now, this stock is in focus once again, and it has hit its upper circuit because Phillip Capital initiated with buy rating and a target price of 210 rupees. What they believe is that it addresses around 65% of the home loan region, home loan segment in India, and they also believe that the balance sheet can actually reach around 2 lakh crore rupees in the next 3 years. Next up, we have Ola Electric, because 2 brokerages have initiated on this company. Bank of America initiated with buy rating and a target price of 145 rupees, while Goldman Sachs initiated with buy rating and a target price of 160 rupees. What Goldman Sachs says is that the company can achieve EBITDA break even by FY27, and we may see ROIC of around 27% by FY30. As a result, we saw some uptick in this counter as well. So definitely watching out on all these counters on the back of the news flow as well as brokerage note that we have received today.
All right, thanks Gaurav for that update coming in. Moving on then, a consolidation may be brewing in India's wealth management industry. Sources inform ET now that Swiss banking giant UBS is exploring options for a strategic partnership for its wealth management business in the country, and it is in talks with 360 ONE. In fact, my colleague Anurag Joshi is standing by with more details. Anurag?
Swiss banking giant UBS is seeking partnership options in India. It is looking for strategic partnership in India, and sources have told ET now that UBS has had an exploratory discussion with Indian wealth management firm 360 ONE for a possible and potential equity purchase, and this proposal to purchase a stake is still at a very early stage, and after the discussion there is no progress on the matter. Now UBS left India about a decade back in 2014 when it had surrendered its banking license, and just last year it made the first steps of an entry back into India when at a global level UBS had acquired Credit Suisse. Just last month the RBI added UBS into the second schedule, and this to allow it to operate as a commercial bank in India. Now, if we look at 360 ONE, it has 7,400 high net worth and ultra high net worth clients, and it's got asset under management of over 5,20,000 crore rupees, and it has 28 offices both in India and overseas. And just in July, Nirmal Jain had left, had retired from 360 ONE as a director.
Thanks for the exclusive news, Anurag, for those details. Moving on, Prakash Priyadarshi caught up with IRDA's CMD on the sidelines of India Renewables Energy Summit. Pradeep Kumar Das, who expect government note for 10% stake dilution in 2 to 3 days. Let's listen.
We will be going for fresh issue because we require fresh capital for our net worth addition because we have to maintain a healthy CRAR. So post our IPO, our CRAR was 25%, it has come down to 20%. And the kind of disbursement plan what we have, our CRAR will further go down. So any ratio of below 18% is not a healthy signal. So we have to periodically pump in equity. So we have decided to infuse equity to the tune of 4,500 crore to 5,000 crore this year end. For that, whatever natural dilution will happen, that will happen for Government of India. Government of India is not going to sell anything. Automatic percentage dilution will happen. We have sought 10%, up to 10%. We are waiting, maybe in a couple of days we will be getting the approval.
All right, so that's the word coming in from the management at IREDA. Let's move on then. And it was JK Tyre that was down and out in trade, went home with cuts of about 2%. JK Tyre has announced a merger with its subsidiary Cavendish Industries in an effort to consolidate all related businesses under one listed entity. And that's an important update coming in for JK Tyre. In fact, my colleague Srishti is standing by with more details. Srishti?
Well, yes, back in 2016, JK Tyre actually acquired Cavendish Industries, and over the years, they brought their stake close to 87 to 89% in this particular subsidiary. And today, JK Tyre has announced that they're going to be merging their subsidiaries into the parent company. And for this, there is a swap ratio as well, because the shareholders of Cavendish Industries will receive 92 shares of JK Tyres for every 100 shares that they own in Cavendish. Now, looking at this particular ratio, this means that this merger actually values Cavendish Industry at 407 rupees a piece, which is significantly higher versus the current market, the current price of JK Tyres. But apart from that, there will be a dilution as well, because at this ratio, the public shareholding is expected to dilute a bit, because post-merger, the public shareholding is expected to increase from 49.5% to 50.6%. Apart from all these announcements related to the merger and the swap ratio, what the analysts believe that this could actually be beneficial, because though there will be some bit of a dilution, but in the long run, given that the capex is under underway, as well as this particular subsidiary is one of the key subsidiaries for JK Tyres, because just in Q4 of FY24, the subsidiary actually contributed over 30% in their overall revenue. So once this merger is done, there will be some cost efficiencies that will kick in, and in the times ahead is expected to benefit the company. But all in all, that's the announcement coming in for JK Tyres.
Right. Thanks very much, Srishti, for lighting all these important comments coming in now. Thanks very much. Well, that's all in this edition of Your Trade. Thanks so much for watching. Stay tuned for more updates.